I can tell you that we had 7 families out shopping for houses this weekend, and 6 of them ended up going under contract.
Hello and welcome to another Mortgage Minute. My name is Matt Thomas. I'm a local realtor in my 15th year. My co-host here is Brian Dewald, a highly acclaimed local mortgage lender in his 20th year of business, and both of us serve the Denver metro and surrounding areas. And today, as always, we're going to talk not only about market conditions, but also give you some viable solutions that we're working on to help homebuyers and sellers navigate today's market. Brian, the last few days, the news has not been particularly great for mortgage rates. You want to tell us a little bit on why that is?
Yeah, so here we are on Thursday, April 11th, 2024. Yesterday, the CPI report came out. So the CPI is a consumer price index, and what it's looking at is the inflation figures for the month prior, right? So there's always about a 10-day lag or so. And so we just got the CPI report for March. It wasn't favorable, which is usually not good news. In fact, 100% of the time, if the CPI is up, if inflation numbers are up, it is not good for mortgage rates. Mortgage bonds very traditionally respond to CPI. The Fed uses a different measurement most of the time. They look at PCE, but the mortgage world likes to really hone in on CPI, and we rose from 3.2 in February to 3.5 in March. So not real good signs there. Yesterday, we're starting to kind of turn it around a little bit this morning, which is common, right? Ebbs and flows. But nonetheless,
We'll take it.
Yep, we'll take it every day for sure. And who knows, maybe by next week, we'll be right back to where we were on Tuesday. But nonetheless, not very good news yesterday.
Yeah, understood. Brian, are you seeing that's affecting home sales in any way?
Well, we'll have to kind of see. Traditionally, when we see a spike, it could slow down a little bit this weekend. But if it, bumps back down next week, it'll be just fine. Going into this, the early part of this week, right? Usually Mondays are pretty hectic for us because we start getting all the contracts in over the weekend. So I haven't seen any of that just yet because it's such fresh news. I can tell you that we had 7 families out shopping for houses this weekend, and 6 of them ended up going under contract. So luckily, all of them are locked, and we don't have to, have that conversation. But anybody that's looking now, we've got to reevaluate some of the numbers and stuff because they're a little different today than they were at the beginning of the week.
Yeah. Well, home sales are certainly kind of the lagging indicator, if you will. The leading indicator is more like mortgage applications and such. And I would imagine that we'll see maybe a little bit of a drop in applications after the metrics come in. If your numbers say 6 out of 7 families that were shopping for homes this weekend went under contract, that's good news. That tells me that there's something suitable for them to buy. That tells me that the conditions were favorable enough for them to pull the trigger, if you will. So that's great news.
Yep, great.
Brian, I know that just last week we had a video rollout that was you introducing your cash program, which is I think pretty tremendous for helping buyers be able to find a home and buy that home before they get their home under contract that they're selling, or even maybe before they list it. Yep. What success are you seeing there?
Well, it's been very successful. We call it the Maverick Lending Solutions Cash Advantage. And 3 of the 6 folks that went under contract this weekend were fully approved with this program and had a house to sell. So it makes them completely non-contingent from any aspect, not just to sell their home, but also from a loan standpoint, right? So we go through the whole process of getting them approved and everything up front. But
they're not even contingent on their loan?
Nope. Well, we go through the process of getting them approved up front. So that when, once the dust settles, right, they buy their new house, they sell their old house, and then we turn around and put a mortgage on it. So we want to know up front that they're going to be okay. Discussions about all that. So there's still a pre-approval process.
Well, it feels like things should always be done that way. I mean, that's why we've been working together for so long. I mean, the fact that you get approvals done, it's just crazy. I think back to, before we worked together and, I'd work with lenders who, they'd say, well, look, get in the car, go see homes, you're good to go, start looking. And then they would start to put together, an approval, and you're like, how are we at this point? Like, you either are or are not ready. And so, it's really been a tremendous boon to my business and just an amazing, what's the word? It's just so helpful for buyers in that situation that they know that they can sort of shop and that they're not going to have any kind of a thing happen down the road where they're not able to get a loan all of a sudden in the 11th hour. And that's great for sellers that you're working with as well. And just on and on. So
well, it becomes really impactful in this scenario, right? Where they've got a house to sell and, we've got $500,000 of our own cash tied up in this deal, or $1 million, or whatever the number is, right? We want to make sure that they're able to perform. So we do a lot of coaching through a lot of that stuff and, make sure everything's going to come together. Obviously, with folks like you, we work really hard with to, make sure all the pieces are going to fall into place when they do. So
sure.
Stuff.
Brian, what else is pertinent that I think those people that are watching that should know about this week?
Well, some other news that came out recently, and it wasn't really dissected all that much. There was so much Fed talk last week, but part of what is happening when the Fed met last week is that they're talking about easing off from selling mortgage bonds, which would be really, really great during the COVID times to help drive rates down real low, right? Everybody remembers when rates were as low as they were back during COVID, partly because the Federal Reserve was purchasing mortgage-backed securities. They were spending a lot of money, like unfathomable amounts, $100 billion a month to purchase mortgage-backed securities. So since then, they've started to sell off a lot of these securities, which is in some way or another helped push rates up since. So, they're talking about regardless of unemployment, regardless of inflation, they're going to ease back selling off some of these mortgage-backed securities, which regardless what happens with and who knows if they'll actually do this, right? But regardless of what happens with inflation and Fed rates and everything else, if that's the case, if they're going to start selling less mortgage-backed securities off, that could be a real improvement for us, no matter what happens with the other two major factors, which are unemployment and inflation. So that'd be great news if and when.
Yeah, well, certainly something to watch for. Maybe not necessarily something to hang your hat on, but it's good news in case that they were to actually start doing that. That would certainly, we would think that the market would react favorably. So one thing that comes to my mind is with the recent uptick in rates that we've seen this past week, obviously you and I will do this. We're studying things like, crazy, watching numbers and keeping our eye on things so that others don't have to. There isn't anybody who knows what's going to happen technically with rates, right? So we can anticipate all these different ways that rates might come down, and we can obviously hope for that. We're all, watching the market to see projecting what might happen if rates did come down, bringing lots of buyers off the fence and getting people into action, maybe more sellers hit the market and so on. But the reality is, if you were in the market a week and a half ago, 2 weeks ago, and locked your rate versus if you did it now, you would actually today you'd be a little bit worse off. And that's how rates, that's what they do. They fluctuate. But the reality is that, these things can go up or down. So when we say, hey, we're looking forward to them going down in the future, we certainly don't know. And what's pushing people forward, I think now, is that one, we're in a rate environment that people are more used to, with the rates hovering around the 7 mark, right? Which is not great, but it's, it's like, well, you either buy a house or you don't. And if you're not in that position, you don't. But sometimes they go up. And we, even though we all think that they're going to probably go down eventually over time here, there's always a chance that they go up. And when inflation remains high, when we have government spending as high as it is, and it doesn't seem like there's any end in sight to that, it may be around for a while, and we may have to get used to these rates. But more than anything, you have to do what's right when you have, when it works for you, when your budget is right, and when the timing is right, despite what rates are doing, going up or down. And there's a lot of people that I think are waiting for them to come down. We just don't know when that'll happen.
Yeah, and I would add too, we got beat up a little bit yesterday, but it's not like they skyrocketed, right? We didn't go from 6% to 8%, right? Most scenarios move maybe 1/8 of a percentage or 1/4 of a percentage, and we're already making a little bit of it back up. So, and we'll probably continue to do that. Who knows for sure, right? Just based on what we talked about. But it's certainly not the end of the world. It's just we're just sharing data like we always do. So.
Well, obviously, people are sensitive more than ever to mortgage rates because of the affordability issue that we have going on. From my standpoint in the real estate world, we're not seeing prices really drop tremendously. And Brian, did you have any multiple offers that your people had to contend with over the weekend?
Almost all of them.
Yeah, it's not slowing that part of things down.
Yeah, right. The only one that was not in a competitive situation was when it was an off-market, like a pocket kind of a listing deal.
Well, we enjoy bringing you these updates as always. We are here to help you, myself on the real estate side, Brian on the mortgage side. Together, we would love to be able to help you out to be able to navigate today's economic waters and real estate waters and be able to provide solutions. So it's what we love doing, and we look forward to you reaching out.
Sounds great. Thanks for having me.
Sir.
See you, buddy.
I don't know why I just did that.